The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Alrighty, folks, we'll come on back here to the Diagnostic Trading Hour. Let's check out where the markets are at in your lunchtime market wrap. Again, broadcasting to you live here on Tiger TV at TFNN.com, inside the eSignal platform, and on your mobile phone at TFNN.mobi. Right now, the S&P is up 2.5 points. The Russell is slightly negative, down 1.3. Little mixed results there on the indices. We got the Dow is up 32 points, and NASDAQ is up 12.5 after having that monster run up last night. We'll get on over at gold. Gold right now is down 17 points. So some great moves on gold. Looking on over at natural gas, it is down slightly down to 0.059. We got oil down 84 cents. Moving on down at $45.09 right now. Looking on over at corn, we have corn is currently, let's see here, down 4 points. We got soybeans is, let's see, corn is up a point right now. Soybeans is down 4 points. And so ags, a little bit mixed as well. Dollar index is up 0.252. It's had some great moves here in the last few days. We got a euro pound is currently down 14 pips. We got the pound dollar down 39. Went over at pound yen up 134 pips. Dollar yen up 110 pips. And the Aussie yen is up 55. Aussie dollar pretty flat right now. Just down a pip on the day. Pretty much unchanged. Dollar franc's down 14. Got the dollar CAD is up 34 pips on the day. All right, that gives you your lunchtime market wrap. Just looking at, just a few different ways that you can put the pieces together and do some trades. Looking on over at today's news. Let's see. So the odds of that September rate hike are coming up. They're going up. And that's, I've been talking about that for, I don't know, probably about 6 or 9 months, something like that. I guess, well, about since February, March, so about a little over 6 months, about the high probability of a September rate hike coming up. And that's usually when the Fed likes to surprise the market. It's like, oh, well, they're not going to do it. Oh, they are going to do it. And so you got the Dow running on up 200 points off the highs right now. September rate hike, odds rise. It's a good sign and a bad sign. It's a good sign because, hey, it's the market's doing well enough that they can raise, the rates. But apparently, it's going to, keep, 200 points right there. We just got just barely off that. If they raise those rates, then that's going to make cash a lot harder to come by. Not a lot harder, but, a little bit harder. And at least that's how some people are going to see it. It's not always what is. It's a lot of times it's just perception. So, and really perception is what matters most when it comes to trading. It's not simply, what I think is going to happen or what I feel is going to happen or what should happen. But it literally comes right down to how people feel like it's going to affect the market, the emotions of it all. And so if I go over and look at that right now, I'm trying to pull this one up over here. Let me see. All right, so we got the Dow, and if I can get my chart to cooperate. There we go. I thought I had my chart to cooperate. So sometimes you get those weird arrows on your charts. But anyway, so we're right up here off these highs of 18,324, and we're starting to bounce off of those highs. So we'll see what happens. Obviously we had that massive drop down to 15. We're down at, 16.7 or so right now, 16.5 at the moment. So it'll be real interesting to see where it goes here. It's going to wait for that rate hike to really make a new high, new low. I'm sure we're going to be a little bit of a holding pattern. Things, especially next week, expect them to get really slow leading up to that. And with that, we'll also we'll talk about the news. We'll go into the news step by step for you and get you ready. We got Euro USD is bouncing off the lows, trimming some losses. Let me pull that chart up. We'll put a few of these over here for you. Okay. And do a couple quick chart scans. There we go. All right. And let's see here. Let's get rid of that. All right. So looking on over at, the euro. And it's coming on down, sort of bouncing off those lows a little bit. Going on in and looking at the U.S. dollar, doing really well. Looking over at the dollar index. And starting to move on back up to those highs of 100.54 that we had back in March. And sort of in the middle of its oscillation range right now. You got a little support resistance levels going on. But, just barely off the highs recent. But, not too far off the highs that we've had, this year. So, of course, we can back that out and see, a little wider time frame. But as you can see, those are the most recent highs we got. And let's go and let's check out gold following as stocks, sort of rallied up, I guess you could say, today. And let's see here. Let's go in and all right. And then let me remove all the studies, make it a lot cleaner. And let's back on down a little bit. There we go. We got 5 minutes. That'll work just fine. And we go over, let's check out gold right now. So gold getting hit pretty hard. A nice, solid downtrend move. Hopefully some of you caught some of that. I mean, it went in just a perfect little, trend starting last night. But don't forget, you can trade. I was talking to some traders last night. And, don't forget, you can trade indices and commodities on the spreads on Nadex at night. So a lot of people don't even think about trading those at night. They just think for it because they got expirations every 5 minutes. But you can trade those like at the market spreads, and they work fantastic for helping you basically help you mirror the market, but at the same time also helping you go in, and it's a little bit easier than binaries. So if you ask me anyway, so a lot easier. And, I trade binaries. I trade a lot of binaries, but I also prefer the spreads. They're easier. They're less stress. And, they have some great contracts available that you can trade. You can go in here. I mean, you're talking 1 or 2 tick wide bid offers. So, proximities, +1, -1, whatever. I mean, you have some great contracts you can trade with a defined risk in the process. And take advantage of that. So definitely check out those gold spreads if you hadn't checked them out, and just looking at them on the scanner right here to see what all is available. And but it makes it just a lot easier to trade. A lot of traders going in there trying to make $20 on a binary contract. It's so much easier to make. I mean, you're talking like 2 points to make $20 on gold, and it's down 16 today. So make life easier on yourself. Let's see here. Going over job openings. So spiking up to a record high in July. So I'll pull that report on up. The openings right here, 5.8 million in July. So, that'll be a little bit of a concern that comes out. Just a lot. It's one of those, like, there's a lot of jobs, which is good, but at the same time, it's reaching new highs, and that basically reflects a lot of turnover and beating some of the previous records. So talks about the total number of jobs increased over the past 12 months for non-farm and private business and stayed flat for government positions. The largest increases occurred in healthcare, food services, retail, and industries. So there's a lot of jobs out there, 5 million new hires, and hopefully people are able to, find the right job that works for them or dive into trading. Let's see on over here. We got Canadian dollar jumping. Let's go and let's look at that release. Go over here. And we'll pull this up. Canadian dollar, right here. Check this out. We'll go in, make in a rate statement. But the Canadian dollar, basically, they left their interest rates the same. And so, obviously that gives strength to it. Let's look at a chart on the Canadian dollar. And we'll pull that up, USD CAD. These are just giving you a little bit of a variety and what's been happening, but you see it climbing on up. And remember that if you're it got like right here when they made the release. I mean, it dropped down. Like, let's see what the time of that was at. What, 10 a.m. What time did they make their statement that they're going to leave it? 10 a.m. So as they left it there, it had a massive, massive rally. Remember, if you're looking at dollar CAD, if the chart goes down, the CAD is getting stronger. If the chart goes up, the CAD is getting weaker. Because you're long dollar, short CAD. Okay? So, on dollar CAD. And then, but it did rally on back up, erasing most of those gains on the CAD. And dollar basically pulling some strength back in. Part of that, if they raise the interest rates, that should increase the value of the dollar to hold it, because it's now worth more because you're getting more money in interest. Even though it's not much of anything, it's still more than it has been. Anyway, so that gave us a few chart reviews that we were able to walk through and check out and see what's going on. Let's look at the indices real quick. I was going to pull up the Dow on a intraday chart and look at that one. Like I said, we had a nice move. Everything was rallying up really good last night. It gave a lot of that back early this morning around 9:30. We saw it just pretty much erase the gains, and then I gained a little bit on top of that, but almost where it was last night before the market reopened on the roll there, and then it climbed up, and it was a great evening to trade the indices. And so again, I just want to urge you to check out the indices at night. Check out the indices on spreads at night, and some pretty cool moves there. And let's see, what else do we got? We got some updates. Oil inventory report is going to be tomorrow. Okay, that's something that people are usually not used to, but oil inventory again should be tomorrow. It'll happen at 11 a.m. Usually it happens on Wednesdays. Okay, it can happen on a Thursday, and it can happen at 11 o'clock. Okay, because we had a holiday on Monday, and so they bumped back that report. And sometimes you see natural gas bump back, but this time natural gas will be at 10:30, and then oil will be at 11. So it's a little bit different volatility, a little bit different players in the market with that. So be aware of that. I hope everybody had a fantastic holiday weekend with their their friends and their family. Some time off. We had a great weekend. I'll have some pictures and stuff up tomorrow. Got to get them all loaded up online, but they're all on the camera and everything. But we went out to the National Rodeo Finals, and my daughter was in the National Rodeo Finals this year. She qualified for it. She got 4th place, and her mentor, Sammy Sellers, got 1st place. So it was a very exciting weekend. It was amazing. She brought home a lot of medals, and she got 4 medals out of the weekend. And she also gets some big thing at the big award ceremony in October for getting 4th place. So, it's embroidered and all sorts of fun stuff. But really proud of her. She worked really hard, and she, has a newer horse that's even going faster, and she's learning how to go fast with it. So she's holding it back, and she got 4th. So very exciting stuff. And like I said, I'll get some videos up on that. We'll be back right after this break. Stay right there.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, welcome on back here to the Diagnostic Trading Hour. And we're going back and just going through and doing some news reminders for you. Oil inventory report, again, is going to be tomorrow. And basically, anytime you have a holiday weekend, that's you should be looking just to be aware that they're usually going to bump that back. And let's see, NQ rolled yesterday on Nadex. So make sure that if you do have access to the Nikkei charts, that you are rolling those over to the new month. This weekend, all four U.S. indices will be rolling over. So a few things to look at if we go over on here. Let's check out cmegroup.com. And we'll look at the equity indices. And let's look at E-mini S&P 500. And we can see the volume. Volume right now is in September. We're going to be seeing over the next week that volume is going to climb on December. More and more and more and more. It will climb up, okay? So we'll be seeing that move quite a bit. And let's see what we got. Trying to see a couple other things that we have that we can check out, but not a whole lot at the moment. Just be aware that the volume is going to be climbing up, and soon it'll be rolling over to December on Nadex as of close of business on Friday. So being, when the markets open back up on Sunday, Monday there, they'll be rolling all the U.S. indices over to the December futures. So like I said, volume will, start to, transition on over. Implied volatility can get a little bit hairy as well. So we'll see how that goes. And then, the futures, by looking at the volume. So if you're a futures trader, you look at the volume, and whichever contract has the most volume on a consistent basis, that's the front month, the liquid month. In normal, there's Contango and all these other fun terms on the, ags and commodities and stuff like that. But most of the time, the contract with the most volume is the front month, the liquid month, the month that you want to be trading. If you're trading on Nadex, the way that you'll know is it'll actually say it inside of the platform. So if I go over and I bring over the Nadex contracts here, you can see like actually inside the platform and just the name of the contracts, you'll see December, September, listed in there. If I go over, I pull up the indices and open up the contract, it'll actually be in the name of the contract. It'll say September. Eventually it'll say December. If you open a ticket, it'll be in the name of the ticket as well. So it's all over the place in front of you. Okay? So there's plenty there. But just so you know, Nadex doesn't always follow the futures because they can't roll on the same date due to copyright, which is really weird. But they're not allowed to roll on the exact same date. So, but futures traders are going to roll based on volume. And most of the time, the volume that rolls over you usually see on Thursday. Friday happens. Often I just wait till Monday to roll over. I'll do it at the end of the day on Friday, and I'll roll everything over because there'll still be plenty of volume and plenty of liquidity. So up to you on what you want to do. But anyways, that's how you know just between Nadex versus futures on when to roll. Nadex actually lists the name of the contract. Futures, you need to look at the volume to know. If you're using Ninja Trader and you want to roll your contracts, you'll go in, you go to Tools, you'll go to Instrument Manager, and let's say that you're wanting to roll over the S&P. So I'll scroll down here to my futures default list here, and I got say ES, and then I'll click the right arrow, and then I'll click the left arrow, and I may need to change it depending upon if it's changed or not. I may need to change it to choose 12/15. Okay, in this case, it should automatically update for me once the volume rolls over. They have a whole database of what date they roll. You can actually look at it under Edit. If you open it up and scroll way down, it'll show all the contract months as defined, and you can see the dates that it'll roll over and to what contract. So if we go down here and we look at 9/15, then that's going to start on 6/11, and on 9/10 is when it shows that, and it's just going to automatically roll it. So, but you still need to change your instrument manager. You need to change any chart you have, any DOMs you have, any trackers you have, whatever, over to the newest month. So pretty simple. And I like actually controlling the month versus just letting it do some default, continuous contract, because it's not always right when it does the continuous contracts. So I prefer to, actually choose the month. I've seen some weird things happen by using continuous contracts. So let's look at the news and what's coming up and what's happened here. Let's see, give me 1 second. I'll pull that up over here on the side. We'll go through, we'll review the news trades that you can take advantage of this week. And we'll do that, like I said, after we get back, after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so going through, looking at everything, getting the news trading plan set up for the week. And let's see here. So we got today is the 9th, and we already went through quite a bit of the news that's coming on out. We got the pound official bank rate. I believe that actually comes out tomorrow. Here we go. Need to adjust the time on that. Let's see here. Let's see. Okay, so pound official bank rate entering at 6 a.m. for an 8 a.m. expiration. Okay, so again, entering at 6 a.m. for an 8 a.m. expiration on this one. And usually looking for a $30 minimum profit. One thing to be aware of on this one is that usually we have the euro interest rate coming out right after it, and then we have the euro press conference. And so the pound interest rate announcement is usually very muffled due to the euro interest rate coming out and then the euro press conference coming out. So it can have a little bit more volatility on the 6 to 8 a.m. one when the euro doesn't come out on the same day and time, okay? So be aware of that. But the average move over the last couple of years is less than 30 pips between 6 and 8 a.m. on the pound dollar. So you could look for a 30 pip minimum profit between the two maximum profits, Iron Condor, when choosing to trade it on Nadex. Going on in, looking at what else we have the Aussie employment change. Is coming out tonight right here. Aussie employment change coming in entering at 6 for an 11 o'clock expiration, looking at a 35 pip move. That's the average move on the Aussie dollar is less than 35 pips. So we're looking for a minimum of 35 pips on the trade. We usually use about a 70 pip stop loss for a 1-to-1 risk-reward ratio on the trade. And then going in, and again, that's using the iron condors. Some other things to be aware of tonight: we have the yen core machinery orders coming out. Their PPI is coming out. So that'll cause a little volatility for you right around 8 o'clock, a little before 8 o'clock. Aussie will also have tonight. They'll have the Aussie MI inflation expectations coming on out at 9 o'clock. So that'll happen in between our employment change report that comes out at 9:30. So just making you aware, China has their new loans and M2 money supply. Who knows what that number will really be, because we never quite know what their numbers really are. But that's coming out at 3 a.m. That'll cause a little bit of volatility in the night. Then we'll have unemployment claims coming out in the morning. Once unemployment claims come on out, we got CAT NHPI and capacity. Again, these are all just more be aware events. U.S. impact price. Now we get some fun news. Like I said, tomorrow we can go in, check out the weekly natural gas and oil inventory reports coming out on Thursday. Oil will be a little bit different because it's on Thursday versus Wednesday. So it won't have all its, average ranges and stuff built in for expectations. Yen will have, again, some more releases, and China will have some more releases tomorrow evening. Again, ought to add a little bit to, some of the volatility in the evening for you evening traders out there. But the eco-finance meetings will start up on Friday. Let's see what that's all about. So, again, they're going to start up on Friday, and there we go. Finance ministers, all that stuff be in Brussels from the EU member states. So discussing a lot of financial issues, and then come out. The meetings are closed, but they will come out. They'll talk to the press, and that can cause a little bit of volatility. Again, most of this will be happening during the day, but it'll happen on Friday. So day one right there. And, of course, number one thing to remember on that is September 11th. So make sure to remember, our loved ones that were lost on that day. Also, we have the U.S. PPI and core PPI coming on out. That'll come out at 7 a.m. to 9 a.m. And, again, 7 a.m. to 9 a.m. For an expiration at 9 o'clock with an 8:30 release on the U.S. PPI and core PPI. Okay. And we'll be looking for a $25 minimum profit on that day. And on that trade, NPC member Forbes speaking news, I wouldn't worry about that one. And preliminary University of Michigan consumer sentiment inflation expectations will be coming out. Usually not a big mover as well. Eco-finance meeting will happen day 2, will happen on Saturday. So there can be some things that come out of those Eurogroup meetings over the weekend. Be very cautious in holding positions into the weekend, because you don't know what kind of comments are going to be made and what kind of impact that can really have on the market when you go in and trade those. Aussie will have its job reports on, just getting you all caught up for now till next Wednesday. Aussie will have its job advertisements, so be aware of that on Sunday. Not Sunday, wait a minute. There we go, hold on. And I'll pull that one back up. That was not Sunday. The Frank PPI is on Sunday. I was like, I thought that one had just happened. So Frank PPI, that actually gives us a trade, which is great. We can enter at 11 o'clock for a 7 a.m. Enter at 11 o'clock for a 7 a.m. expiration for a $35 condor on the dollar Frank. Again, that's where we're looking at the maximum profit between the lower spread that we buy and the upper spread that we sell. And the combined maximum profits of the two needs to be at least $35. Entering the trade at 11 for a 7 a.m. expiration, expecting the dollar franc to not move more than 35 pips. Going on over to the crop progress report, that won't have a big impact. It's going to be after hours there. Pound is going to have a variety of reports. Again, 35 pips between 11 and 7 on it. It's amazing how many of these stay within that range. And then let's see, we go over. We got a little more variety. We got U.S. Reports coming out. Core retail sales in Empire State coming out on next Tuesday. And we'll, for 7 a.m. to 9 a.m. for a 30 pip minimum profit. And then we got U.S. capacity utilization and industrial production coming out at 9:15 next Tuesday, entering at 8 for 10 a.m. again for a 30 pip minimum profit. These trades have won 10 out of 12 times over the last year, so definitely trades you want to check out and at least look at demoing. Strangling pound various reports coming out. These reports usually cause a lot of volatility in the pound. Unemployment rate, the claimant count change, and the average earnings index. Usually causes, again, a lot of volatility. So we'll actually be looking for a strangle on this report next week. It's entering at 11:47 a.m. with a $40 maximum risk on the trade. Usually going for a 1-to-1 on the trade. I mean, trying to net a $40 profit after the loss on this side. It's like 60 pips of profit on one side, losing 20 pips on the other side. We usually get a big move on the pound. So we'll be looking for that to happen next Tuesday. Again, even if you don't trade the news, just knowing when the markets move a lot and how much they move and where to set take profits and things like that during time frames can be very helpful, even when directionally trading, regardless of the news. The last one we got next Tuesday is going to be the Euro final CPI and final core CPI news being released at 5 a.m. So we'll do an 11 to 7, again, $35 minimum profit on that trade. And that will get you caught up from now till next Tuesday. We'll cover Wednesday tomorrow on the show, and make sure you got that one down. Okay, so caught up with news, and basically got the rest of the week and next week. I will be out part of the week next week. Head on out to Ninja Traders headquarters, seeing some of the new stuff that's coming out there with Ninja Trader 8. Let's see. One thing I want to go over with you, we're talking about the iron condors. I just mentioned a lot of iron condors, $35 minimum profit, stuff like that. And we're going through all that. And some of you are probably like, what is that? How does that work? If you haven't listened to the show before or you're newer to Nadex. So what I'd like to do is walk you through a little bit of that and sort of, how to look at them, how they work. So if I go over here and I pull up, any market, and we'll go to the spreads. Okay. And let's see here. Let's refresh this. There we go. And on the spreads, we can go in and we can, you're not going to find anything that expires in, 5 minutes. So we can get rid of gold here, or, 15 minutes. But you'll be able to find something, say, over on NASDAQ. And so check this out. This is pretty cool. What we're going to be looking for, I'm going to maximize this so you can really see the screen here, okay, is we're going to go in and we're going to look at these contracts that have positive premium. What does that mean, positive premium? Well, got a positive dollar sign right there. But 43.31. The market's at 43.25. That means I'm selling, 6 points higher than the market. So $60 right there, because every point is $10 on US Tech 100. So I'd be selling that contract. The market is, again, right here, and I'm able to sell it at a higher price. So if the market stays where it's at, make $73 on the trade. If it moves down, could make up to $115 on the trade. So pretty sweet trade right there. And I like the matchup. And let's see here if we can find 43.20 buy right there. $100. Okay. This one, if the market stays flat, you make $100 on the trade. So that's not bad at all. And notice what I'm doing is I'm buying the lower spread, the 42.80 to 43.20. I'm selling the upper spread, the 43.20 to 43.50. Okay? I have basically about $170 in premium I can collect on this trade. All right? And that means that the market can move up 17 points or down 17 points between now and 4:15. And as of expiration, I would actually be break even if it moves 17 points. If it moves less than 17 or stays flat, I could actually make more. On the trade total, I could actually make about a little over $200 on the trade. So it's a pretty sweet combination for a trade right there to be able to go in and make that kind of profit when doing the trade. And so you just go in, and let's see here if we're logged in. I'll show you this. But so if I went in and I sold these contracts or bought these contracts, and notice the premium's coming down a little bit, but you literally just sell this one. So right there, okay, that upper one up there, we're selling that one, expecting the market to, go down or stay flat or go up to this point. And here's the kicker that people don't get, okay? If it gets to the break-even point, okay, yes, you're break-even, but you've made almost $100 more on this trade, so it can move 10 more points. Because this $100 in profit would actually move over here. Okay, so meaning I made $100. If I lost $100 on this one, okay, if I'm here, I'm break even. That's a little break even line. Okay, but if I made $100 on one and I lost $100 on the other, what am I at? I'm at break even. So putting those pieces together can make for some pretty nice setups. Right now, the market's a little bit closer here to 43.25. So that's really not bad. That's not far off at all as far as the trade goes. And so to do the trades, you literally just, click that side right there and go over and click that side. And, that puts in a few trades for you. Let's see here if I can pull up one other piece I want to pull it for you. All right, so if I put on those 5 contracts right there, okay, then I can make up to $200. That's up to $1,000, okay, on that trade, because I can make up to $200 on the trade. There's $120 in maximum profit potential on the sold contracts. There's $93 in profit potential on the bought contract. That's $200 if it landed in the center there at 43.20. Okay, 5 contracts. That's $1,000 for doing what? For being like having no idea on direction. Okay, if it goes up, I can make money. If it goes down, I can make money. If it stays flat, I can make money. When do I get nervous? Okay, so that's what you want to ask, right? When do you get nervous on the trade? Well, when it basically moves past your maximum profit on the other side. So this contract right here that I bought, I can make $95 on that. So if it moves basically 9.5 points past the break even where I sold this contract, okay, and where did I sell it? I sold it at 43.31. Okay, so if it moves to 43, pretty much 41, that's where I'm going to get, hey, probably need to call it on the trade. So that gives me, a little bit of space. 43.31, 43.41. So that gives me like 16, 17 points of area where I'm not worried about the trade. I just let it do its thing. Okay. As far as, getting up there, I'm like, okay, so how do I make money again? If it stays inside this range, I will make money, and I'll still make money if it goes a little bit outside of it, because the contract I bought will hedge me for $96 above where I sold. So 43, a little bit above 43.40 right there, 43.41. I sold at 43.31, 9 points added onto that. Then we're gonna be right at 43.40. Okay, and then the sold one can make up to $110. Okay, and that's the sold one right there. So basically 11 points below 43.09, so 42.99. So it's about where I would actually be hedged to, so like right down to here on this trade. At those points, that's where I'm at break even. So it's a beautiful thing. Iron condors are awesome. There will be back right after this break.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. And so just sort of, walking through this Iron Condor with you, trying to help you understand it. You can do these, of course. News is just sort of an easy place to start, right? But you can go a lot bigger than that. And so I read off a whole bunch of news trades to you a second ago. And, one thing I want you to see is, so I bought 5 contracts. I sold 5 contracts. And notice how I'm making money, because this is the part that just seems to blow people's minds. But I'm making money on one side, I'm losing money on the other, but the one that I'm making on is helping hedge the loss on the other. And look at where I sold it. I sold it at 43.10. Okay? Or sorry, I bought it at 43.10, the one that's losing, supposedly. I bought it at 43.10. Where is the market at? It's at 43.19. Okay? 43.19. So am I really, if I bought at 43.10 and the market's at 43.19, is that good? Yeah, that's fantastic, right? So, huge key is look at where the market's actually at and where you got in on the trade, okay? So, again, look at where the market's at and where you got in on the trade. So, because if you bought, 10 points lower than the market, it's not a bad thing if the market's 10 points higher. Okay, you may see negative P&L on here, but if the market were to expire right now at 43.16, I bought at 43.10, okay, well then I'd make $60 per contract, $350 on that. What about this 43.31? I'd make all 110. Okay, so 117, I guess. Dollars on this contract right here times 5. So a little over $500, about $800 right now if the market just expired. It can move up here, and the profits on one side, on the bought side, would actually head to the losses on the sold side. It can move all the way down here to 42.90 or so, and 99, I guess, right about there. Let's see, 42, yeah, about 99, so 95. And the way I figure that out, it's pretty simple. It's the profit on one side, subtract where you got in on the other. So let's pull up a calculator. Let's do this math that seems so daunting so many times when you're new to these trades. And let's figure out how this thing actually works. Okay, so right here, if I pull this up, and we only got a little bit of time left, but if I pull this up, I go, okay, what is the max profit on the, we'll just say the sold contract since it's heading down at this moment. Okay, well, 43.31.7 minus 43.20. Okay, 11.7 points. Where did I sell the bought one? Or sorry, yeah, where did I buy? What price did I buy the bought one? So we got 11.7 points. I bought this one at 43.10. So I bought it down here. Okay, because there's premium time value in there. So 43.10.4 minus 11.7. So it can go down to 42.98.7. If it expired at 42.98.7, this is really cool. Okay, I'm at break even. These are just my break even points. This means I lose nothing if it expires there. Okay, if I go to a 1-to-1, and this is where to me it gets really exciting as a trader. I like 1-to-1 risk reward ratio. Okay, then it has to move my maximum profit. So if I got 11.7 on one side, and I got about 9 points on the other side, so that's just 43.20 minus 43.10.4. Okay, 9.6 points on the other side, so I add that to the sold price. That's about 20 points. It would have to move up 40 or down 40, okay, for me to actually have a 1-to-1 loss on my maximum profit. And that is where the magic comes in. And when that light bulb clicks, you will love these things. All right, stay there. We got another great show coming up for you after this. I'll see you tomorrow right here on the Diagnostic Trading Hour.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.